So just to briefly introduce myself, for those that haven't met me or spoken to me just yet. So my name is Jags. I've been at Hiscox for around 4 years now. So I started off in a small new business team, and that was for about a year and a half. And then I moved over to the development underwriting team. So I've been here for the last, in this department for the last 2.5 years as part of the Maidenhead region. Apologies, I won't be on camera today purely because all you will see are my nostrils, unfortunately. So I thought I'd just stick a picture up on there to give you an idea on what you're missing out on. But with Jordan having met me on Friday, the answer is not much, unfortunately. But yeah, just a quick introduction. So for all of my presentations, I always like people to take home a message. I do have quite a monotone voice, so if you do fall asleep within the next sort of half an hour, I don't mind as long as you take these messages home. So the first one is anything to do with tech, media, cyber, or emerging risks. Please send it to us because it should be things that we should be at least taking a look at. It's not to say that I'll write everything under the sun under these banners, but if it involves the magic words of tech, media, cyber, or emerging risks, which I'll explain in the next slide as to what I mean by that, please send it to us. And if you're not 100% sure, again, just please ask, pick up the phone, or drop me an email. I'll send around details to Jordan to triage across to you guys. But if you're not sure, please pick up the phone and drop me an email and ask. Just to run through the running order. So what we'll look at first of all is what we deem at Hiscox internally as an emerging risk, but you guys might see as a professional risk in sort of the general insurance market. We'll move on to our 3 flagship products. So that's technology, media, and cyber. And we'll also talk about traditional PI and D&C towards the end as well. And right at the end, we'll just talk about some packageability sort of benefits of using us, and benefits that you'll see across all of our products as well. It normally takes about 45 minutes, probably a little bit quicker this time given the delays. But what I do ask of you is to make this as interactive as possible. If you do have any questions, just interrupt me and I'll be happy to answer as well. So it's normally at this point in the presentation where if I was doing it in person, I'd normally come in with a bag of chocolates and ask you guys what you think that these pictures mean. But given how Movo is set up and with COVID as well, unfortunately we'll just have to stick to a virtual one, which is unfortunate because no one gets chocolates and I don't get to throw things at people, which I do quite like doing. So before I run through what these emerging clients do, I thought it'd be good to run through what we see as a traditional PI risk. So I used to be a high net worth underwriter when I first came to Hiscox, and I had no clue what they meant by emerging and traditional. So traditional in Hiscox terms, the way I see it is our activities and businesses that would have been around in the 1800s, a couple of hundred years ago. So things like architects, accountants, surveyors, and engineers. And then you've got the emerging risks, which would have been around sort of in the last 40 to 50 years. Obviously, there might be some crossover with estate agents and things like that. So that's the main way I look at it. So emerging is more prevalent business activities in the last 40 to 50 years. The likes of tech and media companies, and then your traditional, probably from a couple of hundred years ago. So in regards to these pictures, I'll just run through what each of them are and what they represent. So each of these pictures have their own specific products with us. So the first one you might have guessed is technology. So this is one of our flagships. And this can include anything from bespoke software developers to hardware installation. I'll go through it in a little bit more detail later on. The next picture, event organizers. So we cover event organizers PI. So this can include just general negligence, as you might expect from a PI wording, but it could be abandonment and cancellation cover as well. And some events you might have a celebrity speaker or an after dinner speaker that doesn't turn up. So we'll cover those types of costs as well, just in case they don't arrive for whatever reason. Health and safety, again, we have a specific product for this. So this can range from fire risk assessments to someone coming in and just talk about general office health and safety to health and safety consultants. Interior designers, so people who are interior designers, not much more to say about that. We also have a photographer's wording as well as part of our media product. And then no prizes for guessing what the next one is. Estate agents, again, another product for that. The only thing to mention that has changed in the last year and a half is that we are no longer writing commercial estate agent business as new business. So anyone who is letting or selling commercial property is not going to be in our new business appetite. So for existing business, we are renewing them, but we are reviewing them before we send terms out. And then bottom left, you have our media clients. So this can range from anything from search engine optimization. So these are companies that will be paid to send companies that they are working for to the top of Google search lists. And again, event organizers and advertising companies are included in this as well. And then you got the next one along. You've got recruiters. So we do have a pretty broad appetite for recruiters. It's probably one of our best running books, so we should be pretty competitive premium wise as well. And this includes ex-vicarious and vicarious cover. And then lastly, on the bottom right, we have a coaching, training and education product as well. So this could include anything from business coaching to someone working in a classroom-based environment for railway safety, or sort of the more hairier product, the hairier sort of side of things. So it could be airside, but again, the only thing that we do ask is for it to be classroom-based and not actually on site. Any questions before I move on to the next slide? No. So this is a snippet of our A to Z appetite guide. Again, I will be sending it to Jordan to filter across to you guys. And yeah, it does just look like a snippet, but it did take a little bit more work than you may imagine, because I had to pick a letter that sort of gives the broadness of our appetite, or best displays it at least. So we can write anything from telecoms to toxicologists to translators under the letter T anyway. Again, it's not an exhaustive list by any means, but it's just to give you an idea on the range of our appetite. So just to run through our 3 flagship products, we'll start off with technology. So just a general overview on our commercial combined appetite. So these are just general offices, et cetera, et cetera. So our general commercial combined appetite for material damage and liabilities is generally clerically based. So people sitting at desks, working on computers, and it could possibly stretch to architects and surveyors visiting building sites with hard hats on and things like that. So commercial combined, clerical only is the message to take away here. So anything like big manufacturing plants or recycling plants or anything manual, we won't have an appetite for. So technology is one of those areas where we do extend our appetite. So this can include IT installation, possible work at height, and product liability as well. Contract works is a part of our sort of standard technology offering as well, but you will have to add it on. And just to run through very briefly on what our covers are and how they might apply to your clients as well. So all of our PI under our tech wording includes full breach of contract. So this is our most claim, sort of our biggest claim source is breach of contract under tech. And you may notice that other insurers such as CFC and Travelers and Markel also includes breach of contract. But what you'll notice with our wording is that we don't define what breach of contract means. So using CFC as an example, while they do give breach of contract cover, what they will do is define what a breach of contract is, whereas we don't. So it's a little bit more broader than it would be with other insurers. There's automatic cover for acquisitions, pretty much says what it does on the tin. So any acquisitions during the policy period, there's automatic cover for. And then our sort of second biggest hit in terms of claim source is infringement of IP. It's sort of a hidden exposure. So this can easily be done. So an example that I normally use is a bespoke software developer. So what a bespoke software developer would do when a customer comes to them is develop a software that is designed for that customer only. But what a lot of people don't realize is that when you do that, the IP doesn't belong to the company who made the software. It belongs to the company who bought the software, so the end customer. And what we've seen a few times is that this bespoke software company would then use the foundations of the software that they've actually done for someone else for a different customer. So what happens in this instance is that the original customer will come back and say, you've breached our IP, which we paid you for, so we're going to put a claim against you. So it's easily done, and probably our second biggest claim source. So one of our newer additions, so these last 3 bullet points are new additions to our wording. So key person cover, which has unashamedly been stolen from our cyber wording. So what this cover does is basically supply an interim staff to either deal with the claim itself. So your CIO, your CFO, or CEO doesn't have to step away from the business and stop trading and deal with the claim. Or if they do need to do that, what we will do is hire in an interim CEO so that the business doesn't come to a halt because of a claim. Service credits, another one of our new additions. So we've added this after getting feedback from our tech clients. So what happens typically during a claim is that a third party would come to us saying we need X amount of money because you've done us a disservice. Once we've paid that money, that relationship between the insured and their customers tends to break down. So what actually happens is that we give them the money and then everyone just walks away from each other. So what we offer as an alternative claim payment service is service credits. So rather than paying money across, what we would do is say you can have X amount of service credits. So it's essentially just free work from our insured, which tends to make the relationship a little bit stickier. So an alternative there as well. And then pre-claim assistance. So this is something that we were doing as part of our standard claim service, but what we have done is just put it officially into the wording. So an insured doesn't have to have a claim to use our advice. So what they could use this service for is that they've noticed something that has gone wrong, but hasn't led to a claim. What they can do is call up our claim service and ask for their advice, even though they're not intending to notify us of a claim. And on the right-hand side, you can see sort of typical businesses we insure. I won't run through the full list, but this should give you an idea on how broad our appetite is in regards to technology. So you've got telecoms businesses, web and app developers, right to hardware installation. So in regards to tech, so we have a saying in Hiscox that no tech business should be a decline for us. So if it is a tech company, please send it across for us to take a look at. Any questions before I move on? No? Okay. Can someone just speak up just in case I've got you guys on mute and I haven't realized?
I'm here.
No questions,
Okay.
thanks.
Thank you, sorry. So moving on to our media and creative industries, so known as MAC, we're internally at Hiscox. So similar to technology, we offer a full commercial combined product, slightly stretching past our clerical appetite for other general products. So this could include sort of setting up stages, setting up chairs, exhibition stands. So more in line with your event organizer's risk. While these things are normally subcontracted out as well, what we do tend to ask for in these situations is for subcontractors to have their own insurances in place. We have cover for the insured's own advertising. So just in case the advertising has to be pulled for whatever reason or reshot, we will pay for this as well. So the example I normally use is the Shreddies advert. So it's one of our biggest sort of advertising claims that we've had to date. So I don't know if anyone remembers the Shreddies advert with the grandmas in the manufacturing plant knitting Shreddies. So what happened in this instance is that one of our insureds was employed by, I think it's Nestle that owns Shreddies, to make that advert, and everything was ready to go. The advert actually aired, so it was on TV. But what Nestle did get in feedback was a lot of people recognized one of the grandmas from her profession, which she was a prostitute. So that was the feedback Nestle got. They then fed this back to our insured, and what they asked was for the advert to be pulled and completely reshot. So that was around 750 grand in total, and one of our biggest advertising claims to date. So rectification costs, similar to our pre-claims assistance in our tech wording. So what this covers is any costs that will fix something that's gone wrong before it gets to a claim stage. So this could be something, so using the Shreddies example, the Shreddies example here is that if the client realized beforehand that Nestle weren't going to be happy with the advert for whatever reason, what we would do is step in and fix the problem, or pay the insured money to fix the problem before it actually became a claim. Automatic cover for subcontractors and freelancers. As mentioned before, if they are sort of doing manual work, the only thing we do ask is for them to have their own insurances in place. Breach of advertising regulations. So this would be cover for breach of watershed rules, or sending out a political or religious message, because you're not allowed to do that. It will obviously have to be a completely innocent mistake. It can't be deliberate for us to pay out, but that's the type of thing this will cover. And then payments towards outstanding fees. So it's not always the case that we will have to pay a third party in regards to a PI claim. So it typically tends to be an insured's customer. What we will do, if the time calls for it, is that we will pay outstanding fees. So what happens in this instance is that an end customer will go to our insured and say, we're not going to pay you our contracts because you haven't done the work, or the work hasn't been up to the standard that we expected. So what they'll end up doing is just walking away without paying. So what we'll do in this instance is actually pay the contract off for our insured. So it's another alternative form of payment there. And then just to run through briefly the typical businesses that we insure. Again, I won't run through every single one of these on the list. So you got anything from photographers to radio broadcasters to makeup artists and commercial film producers as well. Any questions before I move on?
Yeah, no questions. Thank you.
All right, cheers. Just to run through the last of our flagships. So with our cyber appetite, it's always easier for me to explain that what we don't do rather than what we do because the list is much shorter. So what you'll notice in regards to a sort of common theme between all of these trades is the data exposure. So the main reason that we don't write any of these trades is the data exposure. So you imagine how many data records an airline or a utility company goes through or credit rating agency goes through, and the type of data that they go through, which is particularly sensitive. If something were to go wrong, it's not something that we would be up for insuring. You'll notice that insurance brokers are on there, so it's no offense to you guys. Obviously, we don't actually write insurance companies either. So it's all about the records, and this is just too exposed for us to write. And what you'll notice with the bigger airlines and the bigger utilities is the type of fines that are sort of handed out to these companies. So as a standard part of our wording, we do cover ICO and GDPR fines. And what the ICO tend to do is not react very favorably to when bigger companies have data breaches. So what they expect of these bigger companies is for their cybersecurity to be so tight that there shouldn't really be any avenues for a hacker to get in. So the example I always use is the British Airways one from a few years ago, where I think the figure was 350 million pounds in regards to a fine. So anything outside of these, we should be quoting for. Just to run through our sort of core appetite, this is not to say that we won't write anything outside of these parameters. So core appetite, along with PI, is tech, professional, and media companies. And we do have an appetite for design and construct companies for cyber as well. So sweet spot is anything less than a 25 mil turnover. Again, it's not to say that we won't write anything above that. And companies that ideally transmit, process, or store less than 100,000 data records per year. And that's personal data. But again, not to say that we won't write anything above that. But one of our requirements for cyber and data is for an insured either not to be subject to the latest PCI security standards, so i.e. they don't process credit or debit card data, so they don't need to be a part of that, or if they are, that they have to be current with any payment card industry security, because the reason is here that the PCI, you have to sign up to a standard set of protocols if you process credit or debit card data. And if in the event of a breach that they find out that you weren't sort of complying with those protocols, they will hand out a fine. So it's paramount that everyone is up to date with security if anyone's processing card payments. Just to run through our wording very briefly. So your own losses and claims against you will be covered as part of our standard wording, formerly known as first and third party losses, but we change the wording around just to make it a little bit easier to understand for everyone. And I normally use other products in comparison to our cyber to make it a little bit easier to explain. So your own losses, I always compare to material damage claims. So if you drop a laptop, it's your own loss. No one has brought that loss against you. No one is claiming something against you. You've dropped your own laptop, so you'll have to claim for it. So similar thing with cyber. So it's your own losses. So if a hacker comes in and encrypts data and asks for a certain amount of money to then release that data, that'll be an example classified as your own loss. So that's a ransomware claim. Claims against you. So this could be seen, well, the comparison I normally use is PI. So this PI, generally someone brings a claim against you for not fulfilling your contract duties, for example. And in the cyber world, this would be people like the ICO or the PCI bringing claims, well, bringing a fine against you, or it could be public citizens claiming that you haven't kept their data safe and asking for a sum of money in compensation. So this is claims against you is essentially a third party bringing in a claim against you. And then you have a few add-ons. So you've got financial crime and fraud. This is essentially electronic theft. So someone coming in and intercepting an email, for example, changing bank account details so the money goes somewhere else, or actually someone getting access to a bank account and taking money out. So electronic theft is essentially what this covers. And then you have property damage. So an add-on where you have to have the normal material damage with us. So what this covers is any replacement costs or repair costs to any electronic equipment which is rendered unusable as a result of a cyber attack. And you've got operational error, another add-on here, colloquially known within Hiscox as fat finger error. So this could range from anything from adding an extra zero to a bank transfer, or tripping over a plug and shutting a data center down, so that type of thing. And then another added benefit, so this is as standard for anyone with less than a 10 mil turnover, is Hiscox Cyber Clear Academy. So this is a set of 8 modules of cyber training. So just for the client to run through. And what we have found is with simple cyber training, a lot of our claims that we see can be prevented. As an added incentive, if 80% of the workforce complete Cyber Clear Academy, we will waive $2,500 off the excess. So if there's a $2,500 excess, there won't be an excess to pay if there is a cyber claim. Any questions about cyber before I move on to our last couple of slides? No. Cool.
No questions. Cheers.
Thank you. So in regards to traditional PI and design and construct, so you may remember we had an MGA, an internal MGA where we used to split capacity across 3. That is no longer the case. So we shut the MGA down last April, and the agreement came to an end this August. So what you will notice with design and construct and traditional PI risk that we do now have a very restricted appetite for D&C. So the 2 messages are sort of small and beautiful. Small is beautiful, and the small cog in a big wheel is where we are focusing on in regards to traditional PI. So anything anything below a 2 mil turnover is core appetite. We will tend to decline anything above a 2 mil turnover. And the trades that we are looking for are lower consequential loss trades. So if I use the construction of an office block as an example, what we won't be writing is someone putting in the foundations. Because if you imagine the consequential loss exposure there, if something were to go wrong, is pretty big because it's at the start of a project. So where our appetite sits at the moment is where there's a smaller consequential loss. So these will be people coming in at the end of a project and fitting the electrics or the air conditioning machines or the desks and shelves, that type of thing. So if something were to go wrong, there's not that big of a knock-on effect. So that's where our appetite sits at the moment. And this is by no means an exhaustive list of declines. So we're not looking at heavy exposures. So we're not looking at civil engineers. We're not looking at cladding risks or anything to do with bridges or sort of transport networks. Any contracts over 2 mil will be declined, and anything to do with safety critical work as well. Again, I will be sending Jordan as much material as I can on what we do and don't write, which he will filter across to you guys. But this is just to give you an idea on what we don't write anymore in traditional PI. So another example I can give is architects. So we won't be writing architects that are designing skyscrapers or multi-story buildings, but we will possibly look at architects that are of a smaller turnover and sort of doing things like loft conversions and that type of thing. So a lower consequential loss exposure than it would be normally. And then finally, sort of exclusive features and benefits across all of our wordings. Doesn't matter if it's a tech wording or a D&C one. This could be used with your clients as well. So one of the things I look at or sell to brokers is packageability, which I found out yesterday is actually a word. I've just spelled it wrong on my slide. So I've always found the more covers you have with one insurer, the stickier it is for everyone. So obviously we don't want to lose clients and you don't want to lose clients. So the more covers you place with us, the stickier it will be. This especially goes for our tech and media. So we can write anything on the same policy from PI, liabilities, cyber, MLP, and material damage and BI cover as well. Interest-free DDM. I think this is a feature that's not sold enough. I think we're the only ones in the market that offer interest-free DDM. This could especially apply to sort of newer startups, newer companies where they might need to free up cash flow, so they don't have to pay us all at once. They can spread it across 12 at no extra cost. And then purely from a business efficiency example as well. So even your bigger businesses should be taking advantage of this just to free up cash they can use somewhere else. Our continuing policies, you may have seen our policy documents with maximum allowables. So what we tend to do is give an insured a 1.5 times uplift on their turnover or wage roll. So there's room to grow in there. So it's essentially a free rate. So it's a lower rate than we would charge. So for example, if you have a company with a 1 mil turnover, you don't have to tell us about any changes until it hits 1.5 mil turnover. It's essentially a buffer zone where the premium or terms won't change. You've got crisis containment cover. So this is offered to anyone with PI or cyber with us. So it's £25,000 worth of PR costs just in case something does go wrong. That's free of charge. And then you've got ease of trading as well. So you've got Hiscox Trader, which you all should have access to. So it's our sort of online platform where you can get a quote pretty easily. And we are working with Movo to get you guys Actress access as well. So we are on Actress for PI and Cyber too. And then lastly, we have moved to a statement of fact basis, and this is probably about 3 or 4 years on now. So we don't actually need our prop forms filled out for us to offer a quote. It's not to say send us more basic details for a £20 million risk, but if you do have a CFC or a HCC prop form filled out, you don't need to fill out one of ours for us to quote. And then finally, we have a section for questions. Apologies, it's been a bit more rushed than I would have liked, but due to the technical difficulties at the start, I've had to rush through it. So, do you guys have any questions about anything in general? It could be, doesn't have to be about appetite.
I might have a quick chat about that. What you're saying about Actress.
Okay.
So I was a bit puzzled as to why you haven't been around on Actress anyway. That might be one for Jordan and you. And you said it's going to be coming back, yeah? So when's that going to happen?
So from an insurer point of view, we never invested in Actress until probably the start of this year. So we weren't one of their preferred providers. But what we have realized now is that so many brokers are on Actress, we have invested in it. Movo have been activated. So you should see us if you have access to Actress through Movo. Sorry, I don't know how, I don't know the intricacies of Actress. So what I can do is pick that up with Jordan just to see how we get you guys on there.
Yeah, I've done a few tech risks recently, and there's been no sign of Hiscox. The other thing is, a question I had was, I've been taking business away from Hiscox, so I'm sorry to say, for health and safety consultants, because of the blanket COVID exclusion on the Hiscox wording. Obviously, a lot of health and safety consultants at the moment are doing work in safe return to work with COVID. So having a blanket exclusion is not good news for them. Is that something that's likely, do you think, to stay? Is it going to be there forever?
So it's likely to stay for the foreseeable, but I will feed back. So if that's a general feedback we're getting, and the market is sort of leading towards covering this type of thing, we will react. So we tend to be proactive with our wording, but I will feed that back across, and then hopefully we can get that removed if the rest of the market is doing so as well. Do you mind?
Yeah, it's a quite small market that will do it, but I know QBE is still doing it. That's what I've been doing. Is if I see Hiscox tough and safety, have a quick chat, and then and the outcome is always we've moved it to QBE.
Okay, leave that with me. If it's just QBE, I doubt that we're gonna follow them. But if the rest of the market's doing it, then we can have
I don't know if the rest of the market isn't. I just know that that's the competitive issue that is. So yeah.
Okay, that's fine. Leave that with me.
Cheers,
I'll get back to you on that.
Thank you. That's my only question. Thank you. Good presentation.
No, I appreciate it. Sorry, it was a bit sort of, it was a whistle-stop tour.
I'll ask you a quick question about D&O.
Yeah, go for it.
What's your stance with D&O for restaurants and stuff like that at the moment? Because I know a lot of people have stopped doing it.
So MLP generally, we don't have an appetite for a standalone. So if you come to us with a standalone MLP risk, we won't write it at all. But again, unfortunately, any sort of leisure or sort of public domain sort of business activity like restaurants and bars and things like that, we just don't have an appetite for, unfortunately.
Okay. Thanks.
Any other questions at all? It doesn't have to be about appetite, it could be anything in general about Hiscox or insurance. No? Cool.
I'll give you a quick testimonial if you want.
I prefer them in writing, so I don't have my transcript guy here, unfortunately. But
well, just for those people on the call, you guys really nailed a case for me recently, which was struggling like Billios do, because it was a tech risk, and they were acting like a marketplace, and nobody would touch the products liability because it's a contingent products liability, and you managed to package it all up. And I had a really ugly solution with like 4 underwriters, and you managed to package it all up at a better price and with better cover. So it was really good job. Well done.
No, appreciate that. It wasn't me, was it?
Afraid not.
It didn't sound familiar, but I thought I'd ask anyway. But in regards to sort of not physical material, but PDFs and things like that, in regards to our appetite, again, I've mentioned it before. I will send it to Jordan. So what it will include is an A to Z of what we write. Again, not an exhaustive list, and it will include sort of bullseyes, what we call. So it will have our core appetite in the middle, and then as you go further out, it will give you an idea on what we don't like. So that will be for tech and media and management consultants, so that type of thing. So plenty of material to forward across to you guys. But yeah, if you have any questions, I appreciate none of you guys have my contact details. So if you can ask Jordan in the first instance, but I will ask him to forward my details across and a contact sheet for the rest of the team as well. But cool. No, thank you guys for your time and patience. I'll give you guys 3 minutes back of your day, and enjoy your afternoons.
Cheers. Thanks a lot.
Thank you very
Thank you.
much. Bye.
Cheers,
Bye.
bye.
See you later.